Hello, traders. Welcome to another daily recap, daily analysis for March 16th, Thursday. Right now, we are at March 17th, almost 5:30 a.m. About 2 hours, 2.5 hours into the London session. And as I mentioned, Thursday, yesterday was the pretty much the last big event day, the main catalyst. After that, after the Bank of England, everything was quiet, and especially today, I really don't think we're gonna have much movement, regardless of few data coming out in New York session. So let's just get into it. Let me pull out my chart. Let me pull out the Forex Factory first. All right. So after the FOMC meeting on Wednesday, basically Thursday we start with Bank of Japan press conference with on hold, SMB, LIBOR rate. This is all normal, not really an eventful thing. So everything was quiet until the 8 a.m. Eastern Standard Time, which we have the Bank of England, and this was a surprise event actually. Because look at the although the rate is kept unchanged and the asset purchase facility was also the same, but the voting was different. So there was one member that is does not think the rate should kept unchanged, and that member actually think they should raise the interest rate due to the sharp rise in inflation. That, of course, is a very hawkish comment for British pound, and that's why we saw a large buying into a British pound, huge shoots up. And this was really a surprise because prior to this release, if you look at all the major articles, all the prediction was saying that Bank of England should be more dovish, and the reason is because the previous wage growth was a disappointment, and the retail sale was a disappointment. So really, people were thinking that they don't really have much that much urgent inflation issues, so they should keep the rate unchanged. That was a universal prediction, and that was the outcome. But people were thinking the members should be more dovish, and that was not the case. So whenever the market had this kind of surprise, and then it will have a surprise result. That's why we saw a huge sharp shoot up in the British pound. Other than that, after that, building permit and FDIC, this generally doesn't play too much into the market at this time because we just had FOMC, just have Bank of England, and today, really no tier one data. Manufactured sales in Canada, it says red here. I really don't think it's not much big driver, especially we are having a long weekend because Monday is St. Patrick Day. Actually, I'm not sure if it's a holiday or not, but anyhow, it's a St. Patrick Day. Preliminary consumer sentiment is it's most likely not gonna be eventful as well. So, other than this, in the financial market, we did have ECB comment saying that they are really looking to raise interest rate or tapering. So basically, an even more hawkish comment finally come out from ECB member that also support euro. So right now, fundamentally speaking, from central bank point of view or sentimentally speaking, you have a very strong buy into euro, into British pound, and a surprisingly selling into US dollar after the FOMC meeting. And that's pretty much the main picture. And without any more data coming up, we think that's pretty much gonna last until the next catalyst. So we'll see what happens over the weekend and next week. So let's get into chart, and I will explain more. Now, personally, my view, especially for swing trade perspective, still really not changed much. I know there's a lot of surprise for the US dollar weakness, and I was a bit surprised too, actually. So I know the market will always buy the rumor and sell the fact, but I didn't know it would be such a huge effect, would be such a bearish sentiment into US dollar, basically, because nothing has changed much fundamentally speaking. So you can say market maybe overreacted previously, and now it's again overreacted. But that's just the nature of market. It's never, and that's where the money to be made, right? It's never going to be so accurate on anticipated events, right? That's what basically that's what Warren Buffett says about stock market, is that if everybody is rational, then there is no money to be made. So try not to fight it. It's better to ride the trend. So I would get into my chart and trade and some of my thoughts. Next week, let's just do a little bit preview. We have Donald Trump speaks on Monday, and RBA monetary policy meeting minute. So this is a minute, which most likely gonna cause some volatility for intraday trade, but unless we see any surprising hawkish or dovish comment in a minute. CPI data from British pound. This is important because that's where we're gonna see whether the inflation of UK really kicks up, really going to a point that a hike is very likely. So this should be a mover. Core retail sale, let's see, GDT, all usual stuff, crude oil inventory, cash rate. This statement is interesting too because the last RBNZ statement was very dovish. So we will see how they react to it. Generally speaking, last time the data before the RBNZ meeting were very positive. We have very positive GDP inflation. And that's why the market was expecting RBNZ to come out, give a more hawkish comment, but that was not the case. And right after that meeting, all the recent data from New Zealand had been quite disappointed. So we will see, especially the last GDP, which is yesterday. So we will see whether that data will transfer to an even more dovish tone or not. So this is important for New Zealand dollar. And Chairman Yellen speaks, of course, is always a mover for the market. Keep an ear tuned on that, and that's pretty much it. So yeah, that's pretty much it. And let's see what's happening. Okay, let's go back to the. All right, so let's get into some of my trade. So, intraday speaking, yesterday London session, I did took few trades, few winners, few losers. However, I had a big loss from Bank of England, and it was really a bummer for me personally because it's not because only a loss, because it's a mistake that I got into it. Once again, trying to predict the central bank, and as I always say, that if you're trying to predict the central bank, a lot of time they will surprise you, and you will get a big loss like that. So I started the session by shorting New Zealand dollar. Basically, I short New Zealand dollar, bought Euro New Z. So basically, I was shorting New Zealand dollar based on the negative GDP data from the Asian session. So that was fine, shorting. So basically, short New Zealand dollar after the Asian session. Basically, just right after the disappointing New Zealand data, and then I saw a pickup, another trying to touch this 70-50 important resistance. So I just shorted. It went down to here. I was hoping to get lower to grab few pips. Does not happen. So I just moved to stop loss, break even, because I already had 40 pips. Should have just take that out of the table. But anyhow, I got stop out, break even. So this was not a profit. Could have been a profit. As I mentioned, nowadays I find the biggest challenge for me is really the management of my trade and the exit, because my analysis personally had been quite well for me. My general prediction for the direction had been quite well, and the entry point was also not bad for a lot of my trade, but I still have the problem with how to exit, and that's where it sharp up your skill throughout the experiences. So for me, that was something, or that is something I'm still working on, is the exit and management. So this could be a winner. I should have just get out, and the reason is because I somehow want to hold it due to the fundamental bias that I think US dollar is stronger. But I forgot that we had a very negative US sentiment after the FOMC. So basically, I was trying to find a market, trying to say that okay, we should just get over this FOMC dovish surprise. But it's really not a good advice to fight the market. You should just go ahead, go with the flow. So basically, that's what happened in this trade. And I also took New Zealand dollar. Just give me 1 second. Euro Aussie, yeah, that's the one I already mentioned yesterday. The Euro Aussie, I took it out of the negative employment data from Australian. Only took 15-20 pips because right away realized that the report was not that negative, as the lower employment came from part-time, not full-time. Full-time employment actually increased. And then I took Aussie loan, but at a very, very bad entry, pretty much at a high of 0.7710. With 30 pips stop loss, got stop out, small stop loss, and then it just pretty much trading in a range bound. I was hoping Aussie dollar can pick up and keep going higher on top of the US negative sentiment. That was not the case. So another one, Aussie New Zealand, was not bad. I got in pretty much at the low at here, 0.937. So really at a nice area of support, important area, just right up to here, 1.098090 area. So this was a not bad trade. And then Euro New Zealand, I took this one again on top of the New Zealand dollar weakness after the disappointment GDP. Took this one, I forgot where I took it actually. Oh, I took it here, 53 handle right here. So I took a 53 handle after the session because important handle, and we did break above, trying to touch it, couldn't close. Well, actually, we did close below it, but for me, it's just a tryout. I think like, okay, let me try this 53, see if it holds. It actually holds well, shoots up. I pretty much wrap up at this high, because I wasn't sure if it's gonna break this blue line, and it did. But nevertheless, I wrap up already afterwards. That's a winner too, pretty good. Biggest loser comes in that's the Bank of England, and there's no explanation. Basically, the surprise shoots up, so I got stop out. So previously, I got in pretty much ahead of FOMC, and that mistake actually came from yesterday. I got ahead of it from FOMC because I was hoping, or I was predicting that the FOMC could be a buying rumor selling fact, so we could see a US dollar weakness, but it shouldn't last too long because British pound is still very weak, and Bank of England should be a dovish event. That was on my mind. So although we have this shoots up, I did not get stop out, and it actually pulled back all the way before the Bank of England. So I was quite happy. I was hoping. We were at here before the meeting, so I was thinking that maybe we're gonna have a really red candle instead of this huge green candle. So I did not exit. What I should have done is to, if I want to play safe, should have just got out before the meeting at break even, just to be safe. But I did not do that because I was expecting a very dovish Bank of England, and I was hoping a really red bearish candle to touch this support 1.2125, so I can get out with a nice profit. Unfortunately, that was not the case. shoots up right away to stop me out. So that was the big loser for me. Lesson to learn again is just, you could trade into a central bank decision, but just knowing sometimes you'll be right, sometimes you'll be wrong. It is probably best to trade after the decision, because then you have a more certainty of where the market is going. If you want to trade ahead of it, you really want profit from the buying rumor, not from the actual result. Because if you hold until the actual result, you really at the mercy of the central bank. And the thing is, especially nowadays, it's just not, don't take my word for it. Nowadays, if you look at all the economics prediction or even the large hedge funds, there is so much people make the wrong bait or wrong guess, and that's just the nature of the market nowadays. It's highly unpredictable in terms of financial market, central banks, or even politically speaking. It's not an easy job to guess. Even yesterday election, if it was last year prior to the Brexit, we all had a kind of confidence and to guess certain candidate to win. But right after Brexit, right after the US election, 2017, this year, what's coming is France election, German election. I don't think people have that much conviction anymore. It's just hard to say. So it's best for me, at least my method right now, just try not to guess for this kind of major events. It's really, and if you want to do it, you do before that and wrap it up. You don't want to trade through the result, because that could be a nasty drawdown or a stop out for you. So that's it for me for intraday trade. Let's take a look at the daily trade. Now I had British Cable here. Of course, Cable, because of that, it got a huge drop up. As I mentioned, everything is in break even. So this is where I'm still learning or even adjusting according to my psychology, basically, because I'm still, as I say, exit is my biggest challenge right now. I still couldn't have a set method for exit, and especially for swing trade. For intraday trade, it's much easier because I just go with a small profit, go with a very intraday support resistance, and because I'm trading live on my desk, so it has a much higher winning rate. So I'm not really concerned about risk reward and things like that. For swing trade, swing trade is something I'm still figuring out a method of longevity, basically something that can work in the long run, in a yearly perspective. And I do think risk reward will be much more important for swing trade perspective, just because you don't have the leisure to get in and out on time. And for me, exit is something, still thinking. I got in 25, was really right here, was nice, spot on, nice level. Right away went to my direction. I did not exit, and now it almost likely to stop me out break even. So still thinking, this, of course, all these nice 2250, 2125, nice support zone. I could have exit. For me, I was aiming for at least 1 to 2 before I move, before I exit maybe half or things like that. But now it got me thinking, is that really the best method or things like that? So I'm trying different way, maybe 1 to 1 I use 3-bar exit, things like that, or maybe I go with an immediate support and resistance. So something that's still worthwhile for me to think. Of course, if a fundamental picture shift, I will always exit right away. But on all the swing trade I'm having right now, fundamentally, structurally, nothing had changed. It's just a huge sentimental noises. But sometimes, again, those noises can go very large. So for Cable, my general direction is still to the downside. The reason is because even Bank of England today is more hawkish. Don't forget, the UK still has this huge Brexit negotiation. A triggering of Article 50 is coming up. That is going to be the shaker for British pound, and most likely to the downside. and that negotiation will be a huge catalyst for UK, and at that time we'll see what happens. Second thing is that today the member who vote for a hike is going to leave Bank of England members in June, so he's no longer or she's no longer. I'm sorry, I don't know if it's a she or he, but it's no longer a member. So that means if you're looking at a big contest, Bank of England, it's still quite neutral in terms of their rate decisions. So if that member leave in June, that's going to have a new replacement, and that's why I don't think anything had changed for structure-wise for UK or for British pound. So that's why I'm still looking to sell it. Even if we got stop out at 25, 25 is still a very attractive resistance zone to sell. You have 100-day moving average, you have 25, such a psychological handle, and same drill, you can still put your stop loss at 27.50. So that's this trade. Dollar yen, of course, same thing. Huge upset. I was prior to this, again, FOMC, I was saying that we might have a touch to 114, but we should wrap up the day with a strong recovery. And we did have a touch to 114, even lower, but we did not recover from that. So that was a surprise for me. I did not get stop out. Actually, looking at hindsight, 112.81 was not touched 10 pips away. So for me, it's a break-even trade anyhow. And now I'm actually looking to get into it again at 113 area, at this area. So if I get stop out, I get stop out. Looking to get in at 113, support at 111. Again, it's for me, challenge is never the entry or the analysis. It's really the exit, because I could have got out at 115, but you risk missing out. Maybe we have if we had a very hawkish FOMC, the thing will shoot up to 116 or 117. Unfortunately, we didn't have a hawkish FOMC, so it dropped. So just same drill. If it can drop 200 pips, it could shoot up 200 pips. So that's really the personal choice. Whether you. And that's a really hard thing for me, to be honest. I'm still playing around with my own psychology just to see which kind of way of exit I'm more comfortable with. And so I'll figure out more down the road. But that I think that's really the final piece for my my trading, or for anybody's trading, basically. The exit is always something that if you get good at it, then it's really you on your way, a path to an expert. Dollar Swiss is much worse because we almost got stop out. For me, I would just consider this as a losing trade. So never getting at a good area previously. So never getting at a good area. Never had a chance to really move to break even. And you can see I'm kind of stubborn because I could have maybe tightened up, but and that's why I'm saying again, exit and management is my biggest challenge nowadays. Because I tend to kind of managing a little bit mechanically, and always saying that, I need to hit 1-on-1, but maybe. Previously, I just used 3-bar exit, but I find out I got a stop out very easily at whipsaw. So then I used 1-on-1, and now I'm just consider and many other approach to it. Nevertheless, this again is an exit problem for me. Euro dollar, we got stop out previously from our previous entry. Right now, my new entry is in play. A little bit drawdown, almost 100 pips, but 0.8 is a very strong resistance. 0.850 is also very strong. So we have few strong resistance to support these things, and the continuation of bullish strength really comes down from the event. It's not only a FOMC. The FOMC was actually not that bad for euro dollar. It shoots up to 107, but it capped below 107.50 previously. Then the Dutch election gave euro a push up. Then the ECB member today, the rate hike talk, give it another push up. So that's why it's not really predictable, but ECB has become very hawkish compared to before. So we're gonna go. I still think if you're flat, it's 108, a very good area to sell euro in a general direction. Still looking to the downside for me. And other than this, see what else I have. Just give me 1 second. Pull all my positions. Aussie, okay. So Aussie yen and Aussie Swiss. So Aussie yen continue to ride up. 86 my entry, 84 is my stop loss. I'm looking to hit 88 before I do anything about it. Aussie Swiss, same deal. I'm right at the break-even point. So really not much action going on, and I think general direction for Australian dollar still looking to the upside down. Still looking to the upside. We'll see what happened to the RBA monetary meeting next week. So that's pretty much my position. Let's see what else we can do about it. Let's get into a 28 pair. Just give me 1 second. Okay. So Euro Pound right now. All this line is just a weekly resistance support that I draw. Euro Pound really right at a sort of a range bound, and right now you can say ECB and Bank of England are exactly in the same spot. Both become a little bit hawkish, neutral to hawkish. Politically speaking, both had a very big catalyst to come. One has the negotiation of triggering Article 50. One has the France election. So because of that, they both are not good or bad toward each other. So it's not really a pair I play in a swing trade perspective. Your Swiss right now, you could change to a loan, but I just still don't want to buy euro until we have a more confirmed hawkish stance. Second thing is just because the election, April is coming up. So for me, it really tend to stay out of buying euro in terms of a swing trade perspective. I'm really rather waiting for it to come to a nice area to short it. So Euro Swiss, it's just not something. Euro yen maybe, but same thing. I'll see unless we have a very really attractive area or support and resistance. For Euro Swiss, the whole pair, it just does not have a nice range to go. So for me, I just don't like to do Swiss franc trade, to be honest with you. I'll take a look at Euro yen just to see Euro dollar. We already talked about that. Euro Aussie, we'll see. I still have a pending order at 41.50 here. I really like this area here. So we'll see if we touch here. Euro CAD, not something I want to do about it. For Canadian dollar right now, the oil market is still very volatile, still very fragile, basically. And we still have Saudi Arabia coming out today saying that they are thinking to extend the output cut. I think it's more like a confident talk because oil did went down. And even if they have the output cut, that was never the problem to begin with. The oil dropped because of the crude oil inventory. So that was really dependent on the US shale producers. And these two entities are really opponent with each other. So that's why it's hard to have a universal oil output cut to boost the oil price, because one is always going to take advantage of the other. So that's the hard part for the oil market. So Euro New Zealand, we did have this nice green candle. Euro New Zealand actually is not a bad pair to long nowadays for intraday perspective. If you do Euro New Zealand or even any New Zealand pair in a swing trade and looking to hold it, just knowing that sometimes you have to pay for the interest payment, and some people are fine with that, some people are not fine with that. It's up to you how your brokerage works. But that's just something. Understand that the bond yield spread is always in your not in your favor, because there's always gonna be a more natural buyer of New Zealand dollar than euro, just because the interest rate is such a big differences. But Euro USD does have this nice green candle today, and I maybe go back to draw to see if we have we did have a nice support at this 200-day moving average for sure. So 53 area, it's a strong, just looking at it in hindsight, should be a strong support because of the handle 53 psychological number, 200-day moving average, and it does look like it's a nice resistance support. So could worthwhile to try, and I'll take a look at that later on. Euro yen also not bad if you want to try 121.50, maybe put the stop loss below here and just aiming for the high of here. Could be a good trade. Now, unlike Euro, British pound, I'm more definitely, if you have to pick one, I'll be more bearish, just because the article of 50 is going to be triggered this month, so it's coming up very soon. Whether in Euro, the risk event of the French election is coming up, still a month, couple weeks to go. On top of that, I think the Dutch election result really gave Euro a quite confident push. It's pretty nice to see the nationalist candidate did not win, so it's good for Eurozone. So that definitely gives a French election a pretty nice backup, basically. Pound Swiss, cable already talked about that, and Pound Aussie. Pound Aussie also looking to short, but I wanted to go higher. Want this trade to go at a much higher area before I can short it. So we'll see what happened here. And Pound CAD not looking to do anything, same as Pound Aussie. And Pound Yen, Swiss Yen, Dollar Swiss, we already talked about it. Dollar CAD is quite interesting actually. I'm looking to long Dollar CAD, and we are actually at a very nice area at 1.33 right now. So you have all this moving average to support you for this zone, basically. So it is, we don't have a candlestick signal, but if you want, you could long Dollar CAD in a more long-term perspective, providing if you have a large enough stop loss. But it does look like a quite attractive area to get into it. Aussie Swiss, I'll talk about that already. Aussie dollar 77 is still holding, but it does look like it's gonna break above. If we break above, we will keep going higher to this high of here. So we'll see what happened to Aussie dollar. But fundamentally speaking, not something I will touch, because I don't think US dollar is particularly weaker than Aussie. Aussie CAD also is not bad. You are at a nice support of 1.0225 basically. So not a bad support area, a little bit high for me to buy at this area. I really like to buy when the price is closer to at least one of the moving average. The more the better, of course, but so I don't like to buy too far out. Aussie New Zealand definitely too far out, but hey, we might just keep going higher, right? You never know. Aussie Yen, we already talked about that. CAD Swiss, CAD Yen, something I want to touch. New Zealand Swiss, New Zealand dollar. Now New Zealand dollar is interesting. we did have this nice area of support at 70 handle, a nice bearish kangaroo tail, and this one I think I actually got in at a 70 just to try out stop loss at 71.50, very far away of all the moving average. So try out for a long-term perspective. Still think dollar is much stronger than New Z. Trading into next week, the RBNZ decision. Again, I say that it shouldn't trade into that in an intraday perspective, but this is really more a long-term play. Basically, the main reason was the negative GDP data this week, and also the previous data had not been well for for New Z. So for me to find this fundamental bias is quite clear. The price action or the general trend is very clear to the downside. The only thing is that we are very closer to this support, and we did have this double bottom effect previously. So this thing might keep going up. We never know. So we'll see what happened here. You see cat. Not much going on in this pair, and New Z yen. So pretty much that's it. And again, it's gonna be very quiet today and then Monday. So we'll see what happens next week when we have more event coming up. And for me personally, still working on my exit. So that's pretty much it, guys. If you have any question, find this video helpful, just let me know, and I'll be happy to answer your question. All right, happy Friday. Guess I will see you after the weekend then. Okay, enjoy your weekend. Thanks for watching. Bye bye.